The recording is. Okay, welcome to our Coaches Show, Expiration Party Edition here on a Thursday evening, November 20th, 2015. You've got Matt Justice, coach from Tackle Trading, and Tim Justice, that's me, coach from Tackle Trading, here to, have a good time. Enjoy the hour. We're going to talk about a lot of things. We're going to talk about the markets. We're going to talk about your questions, your ideas. We're going to answer them. We're going to hit them up. Guys, let me know if you can hear me right now. Let's make sure we're live and in person. Somebody find the questions field and post a question real quick. And Matt, how are you tonight while we get that going?
I'm doing absolutely fantastic, Tim. Sitting here in Boston and just enjoying Boston. This is I've been here a few times. But we're just hanging out and having a great time, and got a lot of people downstairs, and just the desire, the thirst for knowledge is always motivational. So, looking forward to being here tonight.
You live. I know exactly where you live. You live in Huntington, Utah. To get to Boston, you got quite a journey on your hands, right? Explain what it takes for everybody out there for you to get to an event.
Oh. Drive up 2.5 hours, park, fly to Atlanta. From Atlanta, fly to Boston. Total travel time is right around 12, 13 hours, I would say.
Yeah, 12 or 13 hours just to get there. That's and then you got to get there a day early, get set up, get settled, and then you teach an event. And you do that for 3 days, and these are new traders that you're bringing into the Rich Dad Education program. And then you fly back, right?
Yeah, I fly back on Saturday after the event, and I only do it about 3 times a month, so I'm gone about 10 days total, I would say. But it's such an amazing opportunity to speak for Rich Dad, to such a classy organization, for a person like Robert and Kim Kiyosaki, who are just so amazing in their own right, and to get out there and give people an opportunity. I mean, when it comes to trading in the financial markets, when you first start learning how to trade and you want to do it, you have such a desire to make money. I mean, just a huge desire to make money. But the biggest thing about being a trader and becoming aware of what's happening out there is learning how to protect your money. And today was day one, Tim, and for the better part of the day, all I did was talk about what was happening in the markets and how to protect your investment, how to protect your retirement accounts. And I kept telling them, I was like, guys, I know you want to make money. That's fantastic. I get it. I want to make money too, but you first got to learn how to protect your money. And ended the day teaching the protective put option. And people were just amazed at how a protective put option can literally just shift the risk graph. From when you show like a retirement account on a risk graph, there is so much risk to the retirement account. You add even adding a 5 to 10% protective put option, they're like, oh my goodness, you can do this. And you really just got to kind of teach it in a way that people understand it, And basically what I said is, well, think about it, your house, guys. Every single month you basically buy insurance on your house. And it's the same concept here, but you have a much higher probability of getting hammered in the markets than you do fire damage. And so it's I think people are starting to get the program, and you know what, we got about 50 people down in the room, and it's just a really, really cool thing.
It's really empowering, and it's really exciting to know your journey personally. I'm your brother. I've seen it, firsthand the whole way, and you're out there helping a lot of people. I brought up a little paint program. I put some thoughts on the board here. I want to talk about these different phases of a student's education. One thing that I don't know if we do enough of is talk about our perspective as a teacher and a mentor, because we have a very specialized skill set. We know how to trade. We know about money and entrepreneurship. But Matt, you and I are also experts at teaching. That is one thing we've been doing for a very long time. When you get a brand new student, what are some of the keys that you have in your brain to say, I've got to get across to that new student?
Well, you know what? There's a couple things. Number one, you approach people who are new to the market very different than you approach people who understand the markets. And so when we're talking about a brand new student, number one, the biggest hurdle I think brand new students have is an understanding of the language, in terms of understanding what our trading language is all about. I mean, you got to realize things that one of the reasons why we have a language is the same reason why, lawyers have their own language, so that it's a specialty. It's a special type skill set. And so we simply name things in the financial markets a little differently than elsewhere. So understanding the language and the terminology, I think, is a hurdle. Also, I think one of the biggest hurdles out there is we've been socialized to a certain extent. We've been socialized to believe in what is. And I'll tell you right now, every time I ask somebody, a new trader, say, how much did your 401k do last year? And aggressive funds went up about 20%, defensive funds went up by about 10%. And I asked them, I said, is that good? And they're like, oh yeah, 20% is fantastic. I said, oh, that's awesome. Okay, good. And so then I said, well, what if the market goes up 30, 38%? Like, well, that's not so good. And so you have to be able to identify how well you are doing against some type of foundation. And so understanding what is good and what is not good in the financial markets, because once again, we're sold a bill of goods from the financial industry that says if you average 10% returns over 40 years, you're going to retire with a lot of money, and that's not true. That takes out the equation of bubble markets. That takes out the equation of inflation. That takes out the equation of devaluation. You don't make as much money as you need because of these concepts. And so you really got to get them to the point where they understand that they have to do something else, that the self-contribution model is not working for the better part of the average American citizen, and there's something else they can do. And like I told them today, Tim, I said, hey guys, listen, a couple things. Number one, I got to get you guys to believe that you can do this. That's number one. That's my toughest job every single week, getting people the belief that they can do it. And then number two, showing them a path to do it.
Now, I'm putting something up. I don't know if you can see this right now. Because what you're saying, I heard this the other day. I found it to be empowering. Yeah, I mean, if you've played the game blackjack, I think most people out there, if you've never played it, you probably understand it. Imagine that you're playing blackjack and you get a jack and a queen. You get two face cards. You got 20. The best hand in blackjack is to get 21, right?
Yep.
Would you say to the dealer, hit me, if you had 20? No, of course not.
No, you have an 8% chance of hitting an ace.
8% chance of getting an ace.
You want to do it. No.
But hitting two face cards is smarter than playing mutual funds. I find that because mutual funds only have a 4% chance of beating the market.
Yeah, it's interesting you would say that, because I mean, when you put that into blackjack terminology, it's like, no, heavens no, we would not ever hit a 20. In fact, if anybody ever did hit a 20, you would get up and walk away from the table. You would think the table was crooked and spooked and all of this. But yet, in a mutual fund, literally there is twice the odds in hitting this blackjack and getting an ace as you do a mutual fund outperforming the actual marketplace. And when in 2014, when it is as easy as putting your money into the spiders to invest with the market average, I mean, it's like, why do you pay the middleman 6.5%? Seriously, why would you ever give away money to somebody who does not do a good enough job? It's ridiculous that we as a society actually do this. But at the same time, and also in terms of a 401k, be so regulated that you really don't have that much control in the first place. Mm-hmm. But you know what? That's what society accepted.
Yeah. So a couple of key points that you've made here. When you're brand new, learn the lingo, identify your returns that you're currently making, compare that relative to the market returns, make some changes there, protect your capital. I loved that you started with the protective put option. Just learn how to protect first. I say that all the time. And then something I know you say a lot, just take a step. Take a positive step in the right direction. I had a new student. Go ahead.
Well, I was going to talk about in terms of the protected put option, and Tim, a year ago when I would go, teach a group of students, and anyone, I would very rarely talk about the protected option, pay insurance when there was no risk of the market tanking last year. It was going through one of the most historical bullish years we've ever had. But this year, I've included it in my presentation because it's important that people get insurance right now. And yeah, I know the market is fading up, but it's not going to last, guys. And you've got to get out there and get insurance in those portfolios because as a very new trader, they don't have time to learn how to trade before the bear market hits. And so to buy more time, you have to get insurance. And it's amazing what happens to that risk graph, Tim, when you just add a 10% insurance position. It really starts looking like a straddle type risk graph. So.
Mm-hmm. Mm-hmm. Yeah, and I'm even going to simplify it from there. If you add a protective put, guys, what you're basically doing is you're capping the bottom, okay? So that when you have losses in your potential, you're actually taking that out of the equation. You're saying the most I can lose is a certain amount. Protective puts are a very smart thing for stock investors and people who have IRAs and those types of things. Even if you have a 401k that you feel like I can't get access to it. Well, there are some things you can do that are really simple and really basic for a new trader that you can hedge off that risk.
Well, let's talk real quickly about protecting the 401ks because you are limited in 401ks in terms of the types of strategies you can do, how leveraged you can get in a 401k, and even in a 401k you can control your money. You can invest that money. That's your money. In a 401k that you're at a current job, you just can't pull it out. And so there's things that have been invented for people to be able to make money in bear markets, even in 401ks, such as inverted ETFs, symbols like SDS. You can actually buy in a 401k, and so there's things that you can literally get out there and trade in a 401k, whereas otherwise you could be doing it a little differently.
Yeah, so in a 401k, if you have one of those investments out there, there are a couple of things you can do. First thing you need to do is you need to gain knowledge on what you have access to. Like Matt's talking about there are certain funds that are going to perform differently in down markets, in volatile markets, in bear markets, in bull markets. You need to gain knowledge. The very first step to any 401k investor, figure out what you have and what you can have. Okay, that is really, really smart. Now, second thing is then you can start a margin account that is separate and use it to insure your 401k. Now, this requires some math, but this is the kind of thing that, if it's your retirement, you better take it seriously,
Yeah, let's say, and that's a very, very good point, Tim, because a lot of people think, oh, well, how do we do this? We can't do certain things in an IRA. Well, let's say you have, a 401k. Let's say you have $100,000 in a 401k, and it's at your current job, so you're very regulated. There's not a lot you can do there in the 401k. So what you would have to do is you would take a certain percent, maybe that's 5 or 10% of the money, in whatever capacity. Get a credit card, take a cash advance on it, put money into an individual account. People should be trading multiple types of accounts if they have a 401k. But at the same time, what you can do is you can take that other account, you could use that other account simply as a hedge to protect the 401k. So even in a 401k, sometimes you might have to get a little creative, but you can still do it.
Yeah. I'm sitting here, Matt. It's funny, and those of you who are out there and you're listening to the class and you're here joining our coaches show at Tackle Trading on a Thursday night, thank you for your time tonight. We really value it, and we really, are happy that you're here. I'm sitting here wondering if Gino's going to log in and kick us all out, though, Matt.
The probability of that is 78% right now. It's like filling a credit spread. It's real good probability.
Yeah, if that happens, because we've had some software issues with, GoToWebinar in the past, just log right back in. We'll be right back. So if that does
And
happen, if you get bumped, just grab the same link and come back in.
well, and also, Tim, but I said this earlier tonight, but next week we are moving forward to a different platform, Adobe Connect Pro. We're very familiar with that. Communication's a lot easier on that as well. So you guys should all be receiving a link within the next few days, probably over the weekend. Just know we're going to be using that from now on, and we think it's going to really, really help streamline the communication between you guys and us.
Got some questions coming in here through the Q&A, and thank you everybody for participating there. Let's see, a lot of people confirming the sound. Okay, we're good there. Gerald says, you got to come to Atlanta. Gerald, I've been to Atlanta, and I love Atlanta. I got to tell you,
It's got the best spicy chicken in the world, man.
Well, it has that. It also has is it the Varsity with those delicious chili cheeseburgers that are a triple bypass heart attack.
Love the food in Atlanta.
I have an amazing story from that city, Matt. I was leaving Atlanta, and I just had to see wherever the people were. I wanted to go out. It was May. It was beautiful weather, and I went down to 5 Points, and long story short, I found a group of homeless guys playing chess. There was like 50 of them in a park. And I sat there and watched, and I sat there and watched, and I said, you know what, I'm going to play. I was second place in this 6th grade chess tournament, and I sat down to play, and this guy looks across from me, and he says, all right, you go first. You're white. I move. We play a game. He cleaned me off the table in probably 2 minutes. I mean, it was unbelievable, and I'm a pretty good chess player. But he just had this specialized knowledge of how to play that game. Yeah, I mean, it goes to show you if you put your time and your mind to anything, you could become great at it. I was impressed. I mean, I was blown away by the guy. It was pretty incredible.
Yeah, I've been to Atlanta a few times. I love the city of Atlanta.
Yeah,
it's hot Atlanta. Yeah, I just wish they could figure out how to maybe take 1 inch of snow and remove it from, something. It's amazing to me how Atlanta Airport got shut down for 6 weeks. 6 weeks. It was the worst experience in the history of mankind because Utah, I fly a lot of Delta, and Atlanta's a hub for Delta, and literally they do not know how to remove snow, Jim. 1 inch of snow, it shuts down the entire city for a month. But you can go to Minneapolis, and they'll get 6 feet of snow, and you're still taking off. It's ridiculous.
To bring it back to markets, I'll tell you, it's like the Minneapolis airport knows how to hedge and they know how to protect, where the Atlanta airport's never been introduced to put options.
They're straight over leveraged. It's awesome.
Yeah, dependent on good times. Sharon has a good question. Is a 403B?
Hey, Tim.
Yeah. Go ahead.
Yes, it is. 403B similar to a 401k. And then you got the what does the one in Canada start with? Is it RS something?
Yeah, I've had
one.
Yeah.
Yeah, but, no, they are very similar. When you deal with the different types of accounts, guys, you have 3 main different types of accounts. You have a 401k, which has different variations. You have an IRA, which has different variations, and then you have an individual account. Every type, there it is. Thank you, Greg. Every type of an account is regulated differently. Every 401k has slightly different regulations as well. And so in terms of trading those, it's a highly individual type scenario. But if you do trade for a 401k, there's nothing wrong with that, guys. It's still an account you can take control of. If you switch to an IRA has very similar tax advantages that as a 401k, everything is tax deferred. In an IRA, both of them have capital gains taxes if you pull the money out, which is capped at about 15%. And then you have an individual account of which, if you are a short-term trader, anything less than a year, all of that money that is created in an individual account is taxed at earned income levels, which is just regular wages and whatnot. So every type of an account has pros. Every type of account has some cons. You really kind of need to learn how to trade them in different varieties. I personally trade an IRA for tax advantages purposes, and I trade a and I trade a individual account. I trade the IRA more as long-term growth, those types of scenarios, investing in long stock and short stock too, but from a longer-term perspective, I use the individual account to aggressively trade how I trade: swing trades, day trades, currency trades, and position trades.
You know, it's interesting, and Travis has a good question. I'll get to that in just a minute. It's a good thing to think in different time frames. You know, as a mentor and a teacher, I get students who want to day trade. I get students who want to theta trade, who want to cash flow. I get students who just want to protect their money. So you have to learn how to come from all angles with this. I recently had a guy ask me, you know, hey, Tim, I want to trade, but I really don't have the time to do it. And I said, well, you don't have the time not to do it. You know, I went through the whole thing, tried to explain to him that you gotta value your money and your time. But then I said, okay, what if we just did this? What if every month for the next year, I want you to think of this, Matt. What if every month for the next year you figured out what your budget was, you learned how to protect, you learned how to build equity, you learned how to build assets, you started an IRA, and every month for the next year you buy one new stock, okay? Whatever they are, you know, and you got to make sure you can afford it. You got to make sure you have the right shares. And I talked to him about that, and I said, okay, just spend the month, research a new stock, and buy a new stock. You know, pick a new stock from this list. Learn how to scan. Learn how to think differently. You know, so many times in trading, it's about teaching them how to cash flow, how to day trade, how to do things with leverage. But actually, the longer I've been doing this, I realize there's a lot of people out there in this world that can really benefit from just even little things like learning the value of having an asset instead of a liability, learning the value of saving, you know, learning the value of just thinking about the markets, getting active with the markets. I had another student I was talking to tonight, and he said, well, you know, Tim, I've been through Matt's Master Trader, and I'm in cash flow options, and I just don't know how to trade all those strategies. And I said, well, don't trade them in your live account then. Focus on whatever it is you can do tonight and practice. It's what I was saying in the newsletter a couple weeks ago. You know, trade what you know, practice what you don't. Start somewhere. Just start somewhere. Travis, good question. Go ahead, bud.
Oh, a couple things to that, and then we'll get into Travis's question here. But I think when people first start becoming aware of what the financial trading industry is all about, it's a little overwhelming. Now, well, it's not even a little bit overwhelming. It's completely overwhelming. There's so many different definitions, so many different strategies, so many different rules. And the thing that you got to realize, guys, is when we do it, when we teach it, when we apply it in the markets, you got to realize we have 10 years of trading experience. We, as active traders, we've built trading systems. But when we first started, guys, we didn't have any of that. When we first started, Tim and I were just a bunch of small-town kids from Huntington, Utah, that literally had no clue what this market was. And we just dove into it, and you know, we started testing and started virtual trading, and I remember those first couple of years, Tim. I had many more virtual trades than I had live trades those first 2 years, just because practicing order entry, practicing portfolio management, and you know, and so you got to give yourself a little bit of flexibility in this. You got to give yourself the time necessary to really kind of master trading, because the reality, guys, is to master the art of trading, you need multiple different market cycles. You need to see different market cycles, bear markets, corrective markets, cycles, long-term cycles, short-term cycles. And so you just need time to do it. But the thing about it is, if you never start, and you guys are all taking that positive step, guys. I'm so proud of everybody on this call right here. But at the same time, when you first start, you just got to give yourself flexibility. You got to give yourself time, and you got to trust that it's going to come, it's going to get there. And just over the course of the last month, I'll tell you, I've been very happy with the progress of a lot of the traders over there at Tackle Trading. You know, they've been ever since we introduced the Demicon. the Demicon, or the conversation on the Demicon can't stop. I mean, people are just loving it, and that's good. It's a strategy that you can trade in a lot of earnings positions.
Well,
But there's other strategies too.
I got to tell you, part of me hesitates to get into that advanced stuff right now because we have so many traders that are so new. Everybody kind of rushes out to do it, and they're forgetting the basics, you know. So I want to remind you guys
Well,
out
some
there.
of the easiest trades out there.
Yeah.
All
And Matt, your
and
audio's
just long
there.
stock and
There we go.
capturing a dividend, and some of these things, just some of the basics. I mean, even as an active trader, guys, you got to realize that you got to realize that we're basically trading a lot of the basic strategies. We don't trade Demicons all the time. We don't trade straddles and strangles all the time. We trade a lot of the basic strategies too.
Well, yeah, I think it's a really good point, because let's say that you have an account, and this is your account. It's very possible with all of that, like, like if you ever look at a heat map for the S&P 500 or something like
All right,
that.
everybody, you're listening to Tackle Trading's Expiration Party with Matt and Tim Justice. We are recording.
Well, hold on one second. Okay, are we back now, Matt?
Yeah, Tim, I can hear you now. Are you having some internet issue?
Yes. Oh my God, I got to tell you a story now. My Wi-Fi in my house works great until my wife uses the microwave. And she has to use the microwave, heat up stuff for the kids or whatnot. And I did not tell her that I would be doing this right now. And so she hit the microwave up and it dropped my internet for a second. But I think we're back. I think we're
That is
back.
the random thing I've ever heard.
Isn't that crazy? And, and the thing about it is, even today, like we called CenturyLink is who we go through, and we called them yesterday, and they're like, oh yeah, you can't have your Wi-Fi within 8 feet of the microwave. Well, we had a technician come out, rewire a box, put it in another room. It's on my piano now. You know where that is. It's like 25 feet from the microwave. Still the same problem. Yeah. Technology, man, I'll tell you. It's scary to think that those microwave, signals going through the air probably are going into our brain. What it's called. Anyway, so I had a real major point, and I want to talk about this. So many times when you hear an advanced trader or an experienced trader talk about their strategies in the market, we assume that they're all equal. They're not. See, most traders are going to have a primary approach to trading, okay? And then they're going to have secondary strategies that are just little nuggets in their trading. So when you hear somebody talking about the Demicon or a straddle or an earnings play or whatever it is, it doesn't mean it trumps the primary approach. You might play earnings. You might play, I'm still calling it the correct name, Demicon, if I can spell it right. You might see somebody play something like an inverted fly or, some kind of specialty strategy like a ratio or whatever, right? But that's not necessarily the thing they do with most of their money or their primary approach to trading. Those of you who are out there really need to recognize this. You learn these techniques, and or even something like scalping, futures, or forex.
Day trading, yeah, whatever it is, Tim.
Yeah.
And the thing about it is it all goes to what we call portfolio design. Everything that we do is by design. It's plan it. It's plan of action. Then just execute the plan of action. So, and it goes that way with everything. It goes that way with your portfolio. So let's say you.
Mm-hmm. We're having all kinds of issues tonight. Guys, let me know if you can hear me now. I think we lost Matt. We lost me for a minute. Now we lost Matt. Now we're back. Give me a quick yes. Travis, I still see your question. We'll get to it. Okay, good. Matt, when you are back, go ahead and just dump your, you can turn the mic back on. But, all right, good. Good. We'll fight through whatever technology issues we have. It's what it is in trading. It's one of the reasons why I always have Wi-Fi on my phone, by the way. If I ever lose, I remember in 2007, I'll never forget this. I woke up and I had a lot of positions out there in the market, and I was running my portfolio, and my internet was dead. So I go to log on to my computer, and no internet. No internet at all. And I'm like, holy cow, market's going to open. And I'm like, I've got to have some kind of solution to this, And it wasn't the internet connection, it was my computer had fried. And now that I'm remembering exactly what happened. And so I was like, where can I buy a new computer at 7 o'clock in the morning before the market opens? And I ran down to the only store that was open near where I was living in Murray in Utah. And I went to Walmart. And I went to the guy at the computer section of Walmart, and I said, give me whatever it is you have, Whatever it is you have, I'll take it. And so I bought that brand new computer, and it was a dud. It didn't work out real well, but had to do it. Sometimes you got to have a solution to whatever it is you do. One quick tip on that, by the way, on your contact list on your phone, put your broker's number. Put your broker's phone number in case you're ever on the road or you just can't get to a computer and you've got to make a trade. I don't know if you know this, just because you have an online broker does not mean you can't call them and have them execute something if it's absolutely necessary, okay? So that's a quick tip. Now, Travis had a great question about when you purchase protective puts, do you purchase them when you first sense a higher level of risk in the market, or do you wait for a technical signal such as a break of support before buying your puts? There are different approaches to it, Travis. So what Travis is basically talking about is if I'm in an investment and it's going up with higher highs and higher lows, and higher highs and higher lows, do I just keep my position, let's say that I'm invested, or do I add the put right now with puts for protection, or do I wait for it to drop below support? And I'd say the general answer to that question is, Travis, is that most investors, most hedge funds, they're going to wait for signals. Most investors don't have insurance all the time. They don't just keep the puts out there. They don't just keep the puts on their position. Now, but that doesn't necessarily mean that they wait for it to drop below support. There are several other scenarios that might pop up. What if that there's just some big economic data? What if that's coming out, Think about it like this. Anytime you feel like you need insurance, you need to hedge off. And there's only really two kinds of hedging. There's natural hedging and there's forced hedging. Adding the puts in is what they call forced hedging. It's where you're adding insurance to adjust the delta in your portfolio to protect yourself. Okay? It takes some math. You might need to work with a mentor, talk to them about how to exactly calculate everything out. Let's not worry about that right now. But there's a lot of people that when they're just worried about the market, they're worried about, the market conditions, whatever it is, they'll add in that forced hedge, at that point. Think about it if, we have to have car insurance. Anytime you drive, if you want to drive legally, you have to have car insurance. What if you lived in a world where you only, bought car insurance when you were worried about it or when you felt like you needed it? Car insurance was optional. If I know that I'm going to be on the road, no car, flying, taking public transit and cabs or whatever for a week, like Matt is out in Boston, well, Matt probably wouldn't have bought his insurance right now, would he? Matt most likely would have just bypassed the insurance side. But what if I know I got to go up over the mountain and go visit my mom next week? Well, on a day like that, I'm going to buy insurance. See, that's kind of like what it is with hedging and put options. Pick it up when you need it. If you know you got a long drive and you know that it might snow or have rain or whatever it is, then pick up the insurance that day. All right, good deal. Let's do a little game here. Everybody put in one thing they did this week, and we'll go through and we'll kind of review what you guys have been working on. A trade, a strategy, a symbol that you've been looking at, a concept that you've had. Everybody in the chat, in the questions, we're using that window right there, put in one thing that you did this week. A risk reversal with SLW. Okay. Let's take a look at this. Risk reversal with SLW. Now, SLW has definitely developed a bullish pattern, in terms of short term. It was going down. It broke back above resistance. And I'm guessing when you say risk reversal, I know what you're doing there. You probably, if I was building the risk reversal, this would be a fun little game here, Travis, to see how I would have done it and relative to how you could have done it. Probably something like sell the January 50 Delta 22 put, maybe the 21 put at the time when you did it. And with the $1.40 in credits, by the December, we could probably pick up 3 of these 23s. Okay. Is that close to what you had? Where the risk graph said all that. Looks a little bit like this. So the put's pretty close. Okay, very good. Love the strategy. Risk reversal on if we were grading the complexity of the strategy, I would say it's probably somewhere, on the A grade, on complex level. From a scale of 1 to 10, it's probably 7 or an 8. It's a good strategy, though. I like it. I like the pattern, especially considering the earnings were relatively healthy recently. You're just coming off of earnings. The stock pays a dividend. Silver Wheaton's a huge company. You got plenty of upside. I like it. Good choice. Okay, cool. Let's take a look here. What else do we got? Next one was a bull put spread on GME. Dina Dean. Dina, good to have you tonight. Very cool. I didn't see your name earlier. Nice to have you. All right, bull put spread. Now, okay, one of the very first things, here's a quick tip for beginners. Whenever you take a trade, check for the earnings date. Now, this stock actually had earnings, looks like, on 11/20 after the market. Okay, so that was today. Now, let's go down to a 15-minute chart. Oh, baby, this one's down. Dina, did you check the earnings on this one? Rut-row. I'm just putting an X next to the one we talked about. Yeah, the earnings were a big deal for this one. Now, let's talk about some of the basics. Looking at the chart, I can see why Dina was interested in the graph before she put the trade on. But this is a big mistake, one that we can learn from. There are challenges in life. There are things we do. We're going to make mistakes every now and then. But this stock had earnings on it, and the earnings dropped the stock down. Now, Dina, did you get a chance to check your strikes? What strike prices did you use? Double check here. 40 and 41. Up, you're going to be in the money, my friend. You're going to need to jump in there and manage this tomorrow. This thing is now moved in the money. Yep. Yep, so you got a problem here. So this is a rookie mistake and one we need to correct. You know, we all made it, by the way. So don't worry about that too much. We'll work with you. We'll talk about it. But the stock had earnings. The earnings didn't come out very favorably, and the stock went from $44 in one day down to $39. We could have planned for that. We could have prepared for that. Just put that on your to-do list. Every time you take a trade, you got to double check the earnings. Okay? Now, next, let's see here. Oh, this is what we're doing. All right. Okay, so next is, let's see, very good stuff coming in here. Bear call on GME. Colin, let's take a look here. Now, was this the same stock, Dina? I closed yours out. Or did I get Colin's symbol? Did I get mixed up here? You did GME as well, Dina? GME is yours. And then on Colin, Colin also did this one for GME. So Colin, you took the other side. You played it bearish. Now Colin, yeah, definitely did not go up on this one. Yeah, for sure. Now, looking at this, so Colin, you played the bear call. Obviously, you're gonna be on the right side of that. Very interesting. Okay, got it. Same thing with the earnings. That would be a question I'd ask you as well. Is, you know, how did it? You know, did you plan that in? Or did you factor that in? All those kind of things. Now, what's interesting here, if we actually look at the earnings, they came in just 5 cents lower than what was estimated. That's why it dropped. You know, the company's still making money. It's not like they stopped making money. It's just all about that estimate. It's all about that estimate. All right, very good. Okay. Naked put on Disney, Alice. Now, no dividend on this one. What strike in month did you have on this one, Alice? The December 87.50, okay. So 87.50 is here. You know, Disney's taken over the world. Matt and I have talked about this quite a bit. You know, the volatility dropped back here. This is a tricky chart because, honestly, I think you can draw a trend line there because this volatility was based on that market disruption. Not the best technicals in the market, I would say, you know, with a lower high right here and a drop on earnings, and then now it's kind of breaking down. I love naked puts, and 30 days out is perfect. You know, you're out of the money at 87.50, just slightly out of the money. It's not going to be that low of a delta. I think I hear my brother coming back in here.
Yeah, I had some hotel internet issues.
I figured as much, my friend. It happens.
Well, I see you're analyzing Disney here, and I'm just going to tell you guys right now, the end of the world happens when Disney goes down.
Yeah. Yeah. I mean, you know, I love the naked put strategy, and I love anything that's cash flow positive, that makes money from time. You know, anytime you can go to sleep and you benefit from sleeping, that's cool. I like that. So I'm not going to fault somebody for trying that. I think I would have passed on this one, Matt. What's your take?
Is this a naked put on Disney? Is that what it is?
Naked put.
You know what? The naked put can be done in so many different conditions for so many different reasons. If you could sell a naked put if you just want to own the stock and you just want to own it at a discount. You can do a naked put simply for cash flow purposes if you just want a cash flow.
Mm-hmm.
There's a lot of reasons for a naked put. So, I mean, depending on what that reason is, if you want to own Disney because it's a fundamentally, you know, strong stock and you wouldn't mind owning Disney in your portfolio because they own the world right now, then yeah, mind it. But if you're doing it for cash flow purposes, I would say no to that. that. If you're doing it for cash flow purposes, you want to work in really strong technical stocks. And Disney right now has a lot of slowing momentum, and it's not that great of a cash flow stock. I mean, you can do it; it's decent, but it's not like GoPro.
Mm-hmm. Yeah. Yeah, very interesting choice on this one. Okay, so what I did when we bounced out, everybody put in something they did this week, and so we're going through quite a few of these. We hit some bear calls, and let me look at this. Put spread, Ali. Let's take a look. Ali is one of my most loyal followers on Twitter. Ali, I love it every time you favorite and retweet one of my random ramblings, so... Yeah, let's take a look. SPY put spread 204, 204 and a half for tomorrow. Expiration party special, Matt. This one expires tomorrow. Tell us what you think.
On the put spread here, what type of put spread?
Bull put 204, 204 and a half. Expires in the morning. Or not in the morning, I should say, in the afternoon tomorrow. But
going to be interesting. I mean, if they would have done it on the S&P 500 instead of the SPY, it would have expired. But on the SPY, it doesn't expire until the same as everything else. But when I'm looking at this 204 and a half, 205, you got to go down about a 0.5% tomorrow. You were really kind of tested early today with the futures market. Futures market was selling off early today. Put a gun to my head. This is perfectly fine. It should expire. It should expire pretty much worthless. Tim, what's the future? Yeah.
Let's take a look. Let's go to the ES and take a look. You know, the futures market, after hours.
Yeah.
We got me, Maddie?
Taking a sweet time.
Yeah, I'm here. There we are. It is taking a sweet time. Flat, not doing much.
Flat. Tomorrow we do have some economic reports to drive the marketplace. For example, what do we got tomorrow? We got nothing major tomorrow. It's that big of a dip in the market for it to get there, but I think this one should be fine. I don't have any problem with it.
Yeah, interesting. Okay, next, just going down the list here, Iron Condor on the SPY. Depending on Delta, I would really like it, Delta expiration and credit. You know, I'm fairly neutral on the market right now, so, you know, slightly bullish actually, but just selling volatility going into a holiday week when we're outside of economic data. The Bank of Japan already had their announcement this week. The ECB has a report next week, but I think that fairly neutral is not a bad idea. Yeah, I like that in general. Pretty good. Mm-hmm. We got a rapid fire. This is fast fire right now, so we're going to keep going down the list. So that was Greg and bear put on CMG. My main man Greg Jones right there, pro member. Let's take a look at CMG. Ooh, Matt.
Let's see. That's yeah.
What do you think?
This is a bear put.
Mm-hmm.
I don't know. It's neutral right now. The bear put is a directional position into some resistance areas. Very, very short spread there. I mean, is that this? Was that 65, 650?
That's Martin. Yeah, we have two that did CMG actually. Gregory did a bear put on CMG, so he's betting the downside. Goes to show you how markets, everybody can see something different. And then on the bull side, Martin did a bull put at the 650 strike. Given the ATR, Martin, that one's a tricky one. Greg, I'm assuming your bear put's probably a little longer term. So we have two different time frames here, right? You know, very interesting condition. So basically, we have CMG here that is now rattling sideways. And tomorrow, Martin wants it to stay above 650. Whereas Greg, so it's for Martin's trade, very interesting, Martin needs it to stay up, okay? Whereas Greg, over time, wants it to drop. Obviously, I think Greg would be fine if it went down tomorrow as well. So we're playing different time frames there. That's the interesting part of it. What do you guys think? Let's start with the bull put tomorrow. What's your opinion on 650 right here? Do you think CMG will stay above 650 tomorrow? Everybody give me a quick yes or no.
Yes.
I do as well. So Martin, you've got a tricky one there. Now here's the tip, and Matt, you can comment on this. Guys, if you're going to hold into expiration and you're not willing to take assignment, you have to have access to your computer. It doesn't mean you have to stare at it all day.
Got to be in front of the market.
You got to be able to be in front of the market. So Martin, you got a big day tomorrow on this one. You know, you got to make sure you don't get assigned if you don't want to take the stock or deal with it. Because remember, if it drops perfectly below 650, but above the strike you bought, it's not going to assign the other shares for you. The broker's not going to be real happy with that. I saw some things coming in last week with some people trading at Option House that their broker got rid of stuff, you know, a couple hours before the expiration. And yeah, brokers will do that. That's why you got to talk to them. You know, make sure you know what the broker will do, what they won't do, how it all works. Because, you know, I know with Thinkorswim, Matt, they always call me, you know, before they would ever take action on something. But if I didn't pick up the phone, I'm sure they would do it on their own, you know.
No, they're very good about that. They'll give you a call. They'll send you an email before they take action. Because you know, the brokers, they don't want to upset traders. Because if the broker upsets the trader's going to go somewhere else.
Sure. And then one more that was popping in here for me. VMW 90 strike puts. That's in the money. Wow. Martin, are you selling in the money puts on this one? Is that right? Very aggressive, if that's what I'm reading correctly. I think it says short VMW 90 puts. So I'm picking up the stocks at 82. Do you mean 80? Did you do the 80 down here? Yeah, and why don't we just talk about that for a second, Matt, regardless of what Martin actually chose. The difference between selling in the money and out of the money for a new trader, what would you recommend?
Not for a new trader. Primarily sell out of the money options. Higher probability, wonderful cash flow. Selling it into money option is pretty aggressive.
Yeah, I agree. Guys, you're listening to the Coach's Show, Expiration Party here with Matt and Tim on a Thursday night. Happy to be here from TackleTrading.com. And, you know, I'm excited about what we're doing over there. We've got a good team. We've got good people over there. Are you guys enjoying the website so far? Are you enjoying what we're doing? Got a lot of plans. We have a lot of plans. You're in very good hands because we're developing an entire curriculum. You know, we're going to have some educational videos on there that allow you to go through and learn some of the basics and take quizzes and get a certificate that you passed and that now you know options and all that kind of stuff. You know, we'll keep releasing information as we go. One thing I wanted to pick your brain on, I wanted to see if you'd be interested in this, guys. Would any of you be interested in having one of our Hall of Fame students come on and do some videos on how he trades? Would that be something you'd be down for? Okay.
Oh, yeah.
We're trying to line that up right now then. Okay. So if you guys will show up and you'll participate, I'll line it up. I will. I'll put some details together and I'll let you guys know.
I want to make sure everybody understands kind of the purpose. The reason we created Tackle Trading was to give everybody an avenue, to give everybody a place that we could go with people who are similar mindsets, similar techniques, trading similar rules, and we go get ideas and communicate with one another and give us a central hub, so to speak. And love the questions, the comments, the activity in the clubhouse. Love all of that, guys. The plan for the trading room, Cal, is we're in the process of developing some videos in terms of different types of classes. They would be like an hour to 2 hours long, 10 different video structures where it would teach basically the rules of a trading system. And then after each segment, you would take quizzes to pass that portion of the class so that we can have some type of way to really kind of accredit people's journey through learning how to trade. And if you can't pass the quiz, you shouldn't be trading those types of strategies. So it's going to be highly interactive. It's going to be something that is unique to us in this entire industry, and it's something that we're proud of. It's going to take us some time to really create it. I mean, you guys got to realize at Tackle Trading, we're still in beta. We haven't even officially launched Tackle Trading yet. We've been in beta for about 3 months now, and we're so happy with the progress, but we're still in the development stages. And I think that's one of the things that we will always be, is continuing to develop new concepts, new classes, new everything. And that's also in terms of not only the trading room and some of the other things we got working on, but that's also affiliate relationships with our partners like Rich Dad Education. As many of you know, we're mentors and teachers with Rich Dad Education, and we're working on an affiliate agreement with them right now that we could not be happier because we love Rich Dad. We're from Rich Dad. We wouldn't be here today if it wasn't for Rich Dad and Rich Dad Education and people like Robert Kiyosaki. So we're very grateful for what they've given us, and we're working to partner with them as well and do some really cool stuff with them. So guys, you really are on the ground floor of something that is, in my estimation, going to be the greatest trading website in the history of mankind.
Well, it's gonna continue to improve and improve. And one thing I really like that you've been doing recently, Matt, are the Forex 101 articles. Have you guys read those? Are you enjoying them? Matt put some time together, and he's been trying to start like a series of Forex articles that show people how to deal with the basics. Forex 101 definitions, Forex 101 on what how to trade it, the technicals, that kind of thing. Go check them out if you haven't seen them yet. I think they're really well done and really well put together. Matt, tell us a little bit about your mindset on that.
Well, number one, Forex needs to be in everybody's accounts. It needs to be on everybody's mind. Even if you don't trade currencies in the actual currency market, you need to be aware of what's going on in the currency market as a whole. And I truly do believe this, guys. It doesn't matter how much money you make. It doesn't matter how much money you have in your accounts, your retirement accounts, how much money you have at your job. If you don't understand how to protect the value of your dollar, which is a fiat currency with no true value, you don't understand how quickly it could be taken from you. Just today in my class, I was talking to 3 different individuals. 2 of them were from Brazil and 1 from Russia. And if you look at the history of currency, fiat currencies are taken away from you. Back when Russia was basically when the Soviet Union disbanded, it was back in 1991. Overnight, they devalued their currency by 99%. Overnight, devalued their currency by 99%. And how they did it is they just took 3 zeros off the ruble, literally 3 zeros, just like that. And it just took away everybody's savings account, and it was just a nasty situation. The Mexicans, they devalued the Mexican peso in 1974 overnight by 60%. Overnight. In Brazil, they hyperinflated their currency to such a level to pay off their debt, because their debt-to-income ratio, which is total amount of debt compared to GDP, was completely out of whack. And so, the reason I started the Forex stuff is because I wanted everybody to become aware of what the Forex market is. I wanted everybody to become aware of how to trade it, the definitions. And this is going to be an ongoing series. Once or twice a week, I'm going to just write, a brief blog post. I'm going to do a video recording of a strategy, and obviously I do the Forex report on every Monday as well. And you know, I'm having a lot of fun doing it. I love currencies, and I'm passionate about people becoming aware of the currency market so that they can, once again, learn not only how to trade the currency market, but also protect the value of their dollar. And I'll tell you right now, Tim, I've had some good calls in my life, you know, in terms of do this, do this. A couple I can remember, short gold at 150. Short, you know, went bearish on gold at 150 or 1,500 an ounce. That was one of my good calls. But it's very rarely that they're recorded. And that's also one thing I want to do from now on, is really kind of to record some of the things that we're doing so that we can go back to and say, okay, what could we have done here? And I made a call on October 14th in the Forex report that was long U.S. dollars, short Japanese yen. And it was at 107.5 at the time, Tim. It's currently at 118, hitting around 118. And if you would have just taken advantage of that trade, you're literally talking, you're up about 1,100 pips, which on a standard account you're probably estimate. And that was just something that I felt that I'm pretty proud of. But and I'm still long U.S. dollar, Japanese yen. So every week in the Forex report, I'm also going to be doing those calls, and which ones I'm calling the dogs off on, which ones we're getting into. And it's just it's, you know, I have a lot of fun, but I think people are starting to get it and starting to understand why we need it. I think Tim's audio is wrong. Can you guys hear me?
Oh, I just clicked mute. Sorry.
Yeah, I think.
I just clicked mute.
Yeah.
I was saying it's tremendous. It's actually a callback to what we were talking about earlier, and I find that to be very empowering. You know, we were talking about how a small position in Forex can really change even the nature of your account. You know, you might have your primary approach to trading, which is mostly equity and asset building and protection of your capital and picking up dividends and cash flow and bull puts and whatever it is, whatever that primary approach is. It doesn't mean you can't also add a long dollar short yen position. And guys, on a standard contract, you know, like Matt was talking about,
There's
it's tremendous.
what I was going to say is there's always room to make money in everybody's portfolio.
Mm-hmm.
Always room.
Yeah. Yeah. You guys have been listening to the Coaches Expiration Party here. Just another version of our Coaches Show, a chance for us to give back, come and spend an hour with you guys and talk to you. You know, that's one thing that you're going to get from the Coaches of Tackle Trading is we're committed. That's one of the reasons we started this whole thing, this big team effort. That's why we called it Tackle Trading. We got sports in our blood, and we wanted to be about team from the get-go. Any final questions? Let's open it up for general Q&A for a few minutes, then we're going to wrap it up. We like to keep these things efficient. You know, we ask you for an hour of your time. We're not going to take 2 of it. So any last questions before we wrap it up? I got one for you.
Yes, Cal, that is the MT4 platform, and it does have fat tools on it.
It does if you have the right broker. You have to go through FXCM.
FXCM.
Yeah. FXCM, Cal, is the one I use. So, gotcha. Yeah. Let me ask you guys, what are you going to do tomorrow? Tomorrow's Expiration Friday. What are you going to do tomorrow to make some money or further your account or take another step forward, whatever it is?
Hey, Tim, let me answer Greg's question real quick. I've been trading currencies with Toss for a while, Greg, and I'm starting to not like them from a Forex perspective. It's easy, but I've been filled on some bad pip spreads before with them, and I've been noticing some changes with the way they've been doing their business with currencies. I would I would do FXCM. I would learn MetaTrader 4. On a lot of the currency pairs, you have less than 2 pip spreads. Some on the major ones like the euro dollar, you have less than a 1 pip spread, which is important in the currency market. So I would probably go learn that new software, and that's what I'm doing right now. I have a very difficult time learning new tech. I don't like to learn new tech, but at the same time, you know, you want to trade at the best possible approach, and I think that's going to FXCM. So that's where I'm going to go.
Yeah, and does Bitcoin have a ticker symbol? One that
Not
you
yet.
can, well, you can't.
But you can chart it. You can chart it. You can't trade.
Yeah.
It's so, but there are some things in development, Gregory, for Bitcoin, like ETFs that are backed by Bitcoin, similar to the gold iShares and the silver iShares that are backed by the actual precious metal. Those I would think we'll have a Bitcoin ETF within a year that you'll be able to trade. But right now you're kind of, you know, limited to how you do it, but you can't chart it.
Well, and I'll tell you, if you do put in the symbol BTC/USD, and you go to a website by a company called CoinArc, and I don't have an account there, but they're an international thing. You can get a chart on it every day. I have a thing come to my email, Matt, just from them, that they send me a chart of Bitcoin US dollar every single day. I can do some stuff on Bitcoin.
Well, Tim, you know, we were talking. Oh, we definitely need to do a podcast on Bitcoin again, T.
Yeah.
But when you look at Bitcoin, we were just talking the other day about Bitcoin, and on the podcast, and we were talking about how it's charting from 300 to 400. And have you seen 400 once again held, and it's back down to 355? Mm-hmm. It is so volatile. It's fun, just so volatile. But that should calm down over once it gets more behind it. And you know, Bitcoin is such a fascinating topic, but we can save that to another podcast.
For sure. Yeah, and a couple other last ones, having issues on how to exit trades. Alice, I'll tell you, they're probably going to be too big of a topic to tackle while just in our last few minutes. In the clubhouse, if you'll put in specifically where you're struggling, I'll put a video out there for you. You know, I always put preference on those who show up and put the time in. So in the clubhouse, if you'll just put your question in there, I'll put a video together for you and put it up on the site, okay?
Very specific, Alice. I'm in this type of trade. I'm trying to do this because there are a lot of ways to exit a trade. It's easier to get into a trade sometimes. It's not as easy to get out of a trade sometimes, and sometimes you got to get creative. So just be specific, and one of the coaches will definitely get a video for you, okay? Let's see. Dina, going back to the protect put discussion, mentioned that it might not be necessary to hold the puts until worthless. Do you suggest keeping insurance on all the time or selling it back to the market? That is an absolutely fantastic question, Dina. And how I approach it is I'm always 6 months, 3 months, 6 months, 3 months. And so right now in my which I've been in for 3 months now and I haven't got out, I'm getting in and out at different levels. And so basically what I'm doing is right now I'm allocated in March. Right now on the next dip on IWM, I'm going to close that trade in March, and then the next time it hits resistance, I'm going to reallocate in July. And then when it gets to next March, I'm going to do the same thing and reallocate in October. And so I'm short-term, but I never hold the expiration on it. I won't even get within about 3 months. So that's how I approach it. On other types of insurance, though, you might want to buy a deep leap, which was something like December 2016, and just hold it there and just let the market cycle do what the market cycle does. And if I did something like that, I'd do like a 5% insurance position out of 10, certainly not a 20. I'd just take 5% of whatever is available and put that into a put option on the Spiders or IWM or the NASDAQ or some major market index, and then just never, ever manage it at all. I wouldn't even look at it. So it depends on how actively you want to manage the trade.
Yeah, and Dina, when you and I chat on the phone, we can talk about that a lot further. We can dive into it for sure. Oh my, Matt, final thoughts. Let's wrap this puppy.
Yeah.
Final thoughts. What do you got?
Well, number one, you know, it's awesome to see such growth here. I mean, we have 27 of our pro members here, and that's inspiring, guys, to come out here on short notice and spend an hour with us and to get the help you need. It shows me a lot about your dedication, And I'm going to tell you right now, the coaches will match that. We're going to do whatever we can to help you guys out, to help you in terms of not only understanding the market, but make sure you can navigate the next bear market. Because for many of you, this is your first bear market, and bear markets are tough. They're tough for veteran traders, let alone new traders. And so having people like Noah Davidson and Gino Poor and Tim and myself who have been through bear markets before to help you navigate them and record videos and answer your questions and to really treat this like a team environment, because that's how we see you guys. We see you as part of our team. I see you guys as no different than I see Tim and Gino and Noah. Part of our team. We're all trying to help each other out, protect each other, and grow through this together. And it's an absolute honor to be able to sit here with you on a Thursday night and talk to you guys. It really is, and it's just going to get better and better and better. We're going to have things for our pro members that are very interactive, and just the things that are coming down the pike in tackle trading. I'm getting excited. I have not been this excited, Tim, in years from a technological perspective, and it's going to get better and better and better, and I'm excited for the journey.
Yeah, absolutely. I would concur 100%. And I got to tell you guys, I mean, you're doing what you need to be doing. You're trying to make progress each and every week. You know, don't measure every bit of your success on whether or not you made or lost money in a week. Protect your capital first, learn from your mistakes, continue to improve. The journey that you're on right now, it can have an amazing destination. It does have that. You need to embrace that. You're going to have some ups and downs. You're going to keep moving forward. You're going to get better. That's all you can do. Thank you for attending our coaches show here tonight. If you have any requests, just pop into Clubhouse and put them in there, and one of the coaches will answer it with either a video or a blog or something. You know, we always take those questions seriously. So, take care. Have a good.
Absolutely. And I just want to say one final thought. First of all, you should never use the word great and Raiders in the same sentence when they're 0-10. Just throwing it out there, Gregory. All right, we'll see you at the website, and we will see you guys. Yeah, I know you were. I know you were. And we'll see you on the website, guys. If you need anything for us, just let us know, and we will do more than we can to help you. You've been listening to the Tackle Trading Coaches Show, Expiration Party Edition. We've been also recording Trading Justice Podcast. Check us out over there. And guys, if you don't mind, go over there to iTunes and leave us a nice little review. We're trying to grow that podcast, and all the reviews on iTunes help us do that, put it in a different position on the iTunes ranking chart. So if you can do that, that'd be absolutely fantastic, guys. We will see you on Tuesday for the Coaches Show. Everybody had a great day at Expiration tomorrow, and Theta Positive, and definitely for next weekend, guys, Theta Weekend. Get those credit trades out there to take advantage of a 4-day holiday. Everybody, if I don't talk to you, have an absolutely great Thanksgiving. Tim, I will see you in a little bit.
Take care. See you guys.